let's talk about leverage finance for a moment here, because December was very strong. January was also very strong. What are you seeing in the pipeline that would suggest that strength would continue?
Couple data points. We had the largest inflow into loans in January, which says a lot about that asset class. We've had 5 LBOs print in the month of January at SOFR plus 300 or better. One came at 250 over. And if you look back over a decade, only 13 LBOs have ever hit that spread. So that tells you there's a very good tone in the market to finance sponsors. In addition, I think the market has absorbed the reality of rates are probably going to be here at this level for longer. And again, you and I have talked about this in the past. A 4.5% Treasury is a cost of capital that over 20 years is quite acceptable. So we're quite bullish on not only the liquidity in the markets, both across leverage finance, IG, private credit, real estate, but also we believe the M&A market's going to pick up.
Well, what's incredible to me is not only do you see that data that you had shown, but also all this dry powder that's still on the sidelines. You have some of the best levels of deal making from the big private equity firms in years. And you saw it out of, for example, Blackstone's report, the money they're willing to put to work. Is this in some ways a historic time in the leverage finance markets, given the potential opportunity that could exist and the flows that you're seeing?
I think it's historic in the perspective of when you look back over time, the size of the funds that have been raised are enormous. We also now have the private credit market. People comment on 1.6 trillion. That's another way to finance these transactions in a very productive way, right? And so it is historic in the sense that the U.S. capital markets have innovated and provided this form of capital, and we haven't even talked about structured credit, collateralized lending, and what's going on in that market. So from a deal perspective, the equity funds are larger, the capital markets are robust, so that bodes very, very well for a very strong 25-26.